really care about? Is it domestic demand, or is it exports, or is it the headline number?
Well, in my opinion, I think the market is looking at the headline number. So in the end, it's the question how much growth is there rather than where it is coming from.
And the bond market seems pretty happy with this, right?
Yeah, the market is happy with the GDP numbers, but even more so with Yellen comments you mentioned earlier, and also yesterday we had a similar statements from Pratt indicating that more options are on the table for the ECB. So central bank liquidity is there, and growth is low, and inflation is also low, which is a pretty decent environment for bonds.
And I guess that ECB backdrop, that ECB context is what's supporting French paper, despite these, expected, but the contraction in French GDP.
Absolutely. So, I mean, the idea that France has some structural growth problems is nothing new for markets, but at the same time, the ECB is really determined to keep rates low. So everyone or investors are looking for pickup, and against this backdrop, French paper is still quite attractive when compared to German bonds or other core bonds.
So what is the best trade for you right now in Europe, in the core?
At the moment, we at least technically, we like bonds and we like curve positions here. So curves are quite steep. So what you might do, rather than play these intra-country spreads, which have been a bit volatile lately, what you can do is simply look for the curve to flatten somewhat a bit over the next couple of weeks.
I saw the French CPI number as well, off 0.1% on the month. I mean, this looks weak. We've got final Eurozone inflation numbers tomorrow. The big question is the Eurozone turning Japanese? What do you think? Is it?
We don't think that these Japan fears are justified. Of course, inflation pressures are very low. And as you mentioned, the French CPI print confirmed it today. Tomorrow we get another confirmation for the Eurozone. But nevertheless, if we look at things like the core rate, we actually see that the underlying trend is rather stable at a low level. So we expect a sort of a 1% inflation rate going forward, which again is not really justifying these Japanese fears.
Very quickly, we have a great anticipation ahead of Yellen. The market's moved already. It seems a lot priced in. Are we going to see more strength on the back of this afternoon?
I think expectations, are that we're not going to get a substantial follow-up on the statement already released. So, she made her dovish point, and I think this is as far as it gets for the time being.